Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account. Today my stock account has earned $2,308 US. US stocks closed down on Friday as the regional banks continue to fall. The more you rise, the more you enjoy. Multiple positive plus gold prices in the 2000 mark. Right now, the net asset of my account is 75,471.61. Today, including the pulse market, I've gained $2,243.72, or a gain of 3.06%. Today, I sold all of my DRV shares, and right now the net asset of the net payout of this DRV in my account is 1,658.72. SQQQ rose for 1.38% to $34.49. Today, market closed mixed, with most of the industries closed lower as the banks and other tech industries closed lower. Dow Jones Industrial Average closed to 31,861.98 points, and that's a loss of 1.19%. Nasdaq Composite made a loss of 0.74%, and the S&P 500 made a loss of 1.1% to 3,916.64 points. Investors are worried about the prospect of First Republic Bank and other regional banks after several European and American banks erupted and bankrupted, and Silicon Valley Bank variant SVB Financial Group filed for bankruptcy protection. The banking crisis in Europe remains the most worrying event for investors. Shares of First Republic Bank closed down 33% on Friday, giving it a 71.92% drop for the week. On Thursday, U.S. banks, including J.P. Morgan Chase and Morgan Stanley, said they will provide a total of $30 billion to aid to First Republic to show confidence in the U.S. banking system. A joint rescue by several banks helped First Republic shares rebound strongly and close up nearly 10%. But after the close on Thursday, First Republic disclosed that the bank had borrowed between $20 billion and $109 billion from the Fed between March 10th and March 15th, raising concerns that the $30 billion in deposit might be far from enough. Previously, Silicon Valley Bank announced on Friday that it had filed a Chapter 11 petition with the bankruptcy court for the Southern District of New York to preserve assets. SVB Securities and SVB Capital Funds and the general partner entities were not included in the Chapter 11 filings because Silicon Valley Bank continues to explore strategic alternatives to those valuable businesses. Any sale will be made through a Chapter 11 proceeding and is subject to court approval. Among the European banks, Credit Suisse, which describes a significant flaw in its financial report, is also attracting attention. The bank announced on Thursday that it will borrow up to 50 billion francs from the Swiss National Bank, giving it a breathing break. Both Credit Suisse and UBS have expressed opposition to any forced merger, but speculation about possible Credit Suisse takeover by other institutions remain high. After the explosion of Silicon Valley Bank's signature banks and Credit Suisse, investors are weighing the impact of the banking crisis on the Fed policy next week. The European Central Bank raised interest rates by 50 basis points on Thursday, suggesting the Fed could follow the suit. J.P. Morgan Asset Management believes the U.S. banking crisis could be a chronic problem that the Federal Reserve and the European Central Bank could pause in raising interest rates. The company said the European Central Bank may stop raising interest rates as the U.S. banking crisis will trigger an economic slowdown. Worrying confidence in U.S. banks could become a chronic problem, forcing central banks of major countries to stop raising interest rates sooner than expected. For ECB, he said, this means it could be delayed last rate rise. Or for Fed, it could be paused for next week. Davis expects signs of further tightening of lending conditions in Europe and US in the coming months, raising chances of a hard landing for the global economy. Infrastructure Capital Advisor CEO Jay Hatfield said, the market is now a tug of war. The regional banking crisis is a huge disadvantage for the economy and the market. But before the banking crisis, the continued negative impact of the too hawkish and irrational Fed. He added, every tightening cycle at the Fed exposes some of the economic weaknesses. What we see here is the collapse of the Federal Deposit Insurance Corporation insurance policy. We urge people to be cautious, especially before the Fed has something to say. By the European and American banking crisis sentiment, the precious metal rose collectively. Future gold, spot gold, and both rose more than 3%. Gold for April delivery, the most active traded futures market on the New York Mercantile Exchange, was at 1,988 an ounce, while spot gold was at 1,987 to 83, both up more than 3%. Separately, silver futures for May delivery are trading at $22.718 an ounce, the highest level since February 3rd, up 4.7% on the day. The precious metal sector in U.S. stocks continued to move higher, with Harmony Gold up more than 9%, Kinross Gold up 7.7%, Pan America Silver up 7.4%, Fortuna Silver up 7%, and Goldfield up 6.7%. Newmont, the world's largest gold miner, rose 5.5%. In the recent days, the Bank of being occurred in the U.S., causing market shocks and panic. Shares of First Republic Bank fell 24% at the press time, while Credit Suisse U.S.-listed stake also fell 8.8%. At present, 3 major U.S. stocks indexes are significantly lower. The VIX Fear Index rose more than 10%. The tight market sentiment is one of the main reasons for the gold rise. Some of the market's tension was partially eased by a number of large banks injecting $30 billion into First Republic yesterday. But that optimism soon faded. Market analysts say these banks will still need to cope with a more difficult business environment, and depositors are suddenly aware of the danger of unsecured large deposits. Also, there was no significant improvement in Credit Suisse. Mark Herbenstahl, president of Pennsylvania Mutual Asset Management, said the stock price level has in a way become a crisis of confidence in Credit Suisse. People are looking for every possible way to gain protection. These banking crises are widely seen as a result of Fed's continued aggressive rate hikes, putting the Fed in an awkward position. Continuing raising interest rates could exacerbate banking turmoil. Not raising interest rates, high inflation, and ultimately collapse the economy. A week ago, markets had thought the Fed was likely to raise interest rates by 50 basis points at the next week's meeting, but reversed course that after the Silicon Valley Bank collapse. CE's Fed Watch tool said the market now has a 68.6% chance of a 25 basis point rate hike next week and a 31.4% chance of not. Gold benefited as some of precious metal analysts said markets believe the Fed could end the rate hike and next week's meeting and then remain unchanged. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.